Thank you.
The hangover continues. Wall Street selling off again following the UK's vote to leave the European Union. It is now the S&P is stripping Britain of its AAA credit rating. Let's bring in today's panel. Scott Martin from Kingsview Asset Management. He's also a Fox News contributor. John Petrides from Point View Wealth Management and Scott Wren from Wells Fargo are all with us. Scott Martin, let me start with you. What do you think of the downgrade?
It's not surprising. I mean, I think you got to take downgrades these days for really what they are, which isn't terribly much. I mean, don't forget some years ago, the U.S. got downgraded. In fact, it was our debt that was downgraded, and our debt has only gone up in value since then. And these are a lot of rating agencies that totally blew the financial crisis in 2008. So to me, I don't think really that's what the market reaction is to. In fact, if you look at financials and some other things that tend to be kind of rating agency related, to me, that's the yield curve. It's the fact that interest rates around the world are negative and or going down, and that's bad for banks.
Yeah. John, what do you think? I mean, in all of this, I always think there's opportunity out there. I mean, the first thing I do when I look at currencies, I'm like, wow, there's got to be a big opportunity there.
Yeah, this may be a contrarian thing to say, but investors should be embracing the Brexit vote because it helped push the reset button on a market that had been really on a nice trajectory upward since mid-February. Now you get the reset back on some really great opportunities out there, individual stocks where companies are trading at really cheap cash flow and great opportunity to buy for the long term.
Boy, Scott, I mean, that's an interesting way to look at it. What do you think? You agree with that?
Well, you know, Melissa, I'll say for the S&P downgrade, S&P is guessing. They have nothing solid. They're just guessing like a lot of other people are. But if you look at it, you know, we were about less than a percent away from the record high last week. Now we're about 5% lower than where we were before. So, you know, this happened fast. It's only a 5% pullback. We're going to see a lot of volatility. This is a buying opportunity. We want to be buying large cap U.S. stocks into weakness.
Yeah, Scott Martin, if you had to pick a place where you saw opportunity, what would that be? I mean, we become the safe haven in a lot of different ways.
Yeah, the U.S. is definitely where you want to be. You don't go international. I still think, though, guys, it sounds crazy. Stocks are okay here, but I still like bonds. I think bonds are pretty safe, especially given that the U.S. 10-year, I guess, is the strongest guy or girl at the beach, and that's where I'd be putting some money if I wanted in a safe haven.
Really? John Petrides, you think now would be a time to add to a position in bonds?
No, I wouldn't do that. I think you could find some of these large cap, big multinationals with big dividends, companies that have grown their dividends over time, where you're picking up much more yield and more stability than you would in the bond market, where you have a higher margin of safety because of this pullback than you do in the bond market today.
Okay, let's turn
Guys,
to
we're down
some
1,000
real.
points.
Hold on a second, Scott. We're going to get to some real bargains now in the front line of today's sell-off. United Kingdom banks taking a big hit as investors fear more uncertainty in the market. They were already down from Friday, but the financial sector is seeing its steepest two-day drop since November 2011. Look at that. Barclays down more than 20%. John, you were just talking about getting some bargains. Is this where you'd look?
Well, no, I would let the financial sector, if you're a long-term investor, financials could be interesting, but short-term, you know, interest rates aren't going up anytime soon, and in the European market, you're going to get negative interest rates. I would be focusing on the leisure sector, you know, the cruise lines, the airlines. That, to me, looks like has been sold off way too much. American Airlines, Carnival Cruise, these stocks have been punished way too hard.
And actually, as Donald Trump mentioned, as the dollar gets stronger, you can go overseas more easily and get more for your buck. Exactly. Scott Martin, I'm wondering if a bank like Barclays or Royal Bank of Scotland could actually go under. Are they in that much danger right now?
I don't think right now, David, there's that contagion counterparty risk that was out there swimming around in the 07-08 period. Now, don't forget, I mean, it just takes some outflows and some disinterested investors and borrowers to suddenly leave a bank. I mean, that's something that money can do on a whim these days. So certainly, yes, that's something to keep in mind going forward here. I think this is more of an issue of getting used to what the new EU looks like, what the new UK looks like, and that to me is not a good place.
It's going to change a lot over the next couple of years. Well, Scott Wren, I'm wondering, as these banks really get hit, and some might go under, could it be that the central banks of Europe have to become the lenders of last resort? And if that happens, a lot of these central banks are holding awful stocks and bonds, some of which could drag it down.
David, they would do that, and I think they may have to in this particular case. We aren't there yet, but certainly I think it'd be a bad idea for investors to try to step into these European banks right now. We're even Wave Financials. As I think John said, interest rates aren't going up anytime soon. The global economy is not going to accelerate. Financials, you shouldn't be looking for spots to get overweight or catch the falling knife.
By the way, Fitch is right with you on that. They downgraded the Bank of England, the Central Bank of England, today. So it's, times are going to be tough. Times are really going to get rough. Fasten your seatbelts, Melissa.
All right, meanwhile, I think the flip side of that equation is U.S. airline stocks hitting new lows as investors worry about how the UK decision will impact transatlantic travel. Scott Martin, explain this to me. So are people going to be flying a whole bunch less now? I mean, I don't really get the logic necessarily.
That's the beauty of the market, Melissa. I mean, you get these areas that seemingly were distracted, or at least disconnected, rather, from this big move in Britain, and then, it's going to affect everything. What I do think is going to happen, though, is in general, there's probably going to be some sort of malaise that's going to wash over the EU. And my guess is that's extrapolated in the fact that, okay, maybe people aren't going to travel as much, maybe they're not going to spend as much money. But that is probably one of the better opportunities out there with regards to retail exposure, travel and leisure in Europe, because it's definitely going to bounce back, especially if the euro is weak. Yeah,
I mean, John Patrice, let me throw some stats at you. So about 6.2% of Americans' capacity touches the UK, 5.3% for United, 2.7% for Delta. That's all that even touches it. And even, hammering those would assume that people are going to travel less as a result of this. So what are you pricing in, like an enormous economic slowdown? I don't know. It seems like there's an opportunity in there.
Yeah, you're right. I thought the airlines were an attractive industry to invest in prior to Brexit. Oil was rising, so there was a gasoline sensitivity issue there, which brought the price of these stocks down. Plus, you had the Zika virus. Now you throw Brexit on top of it. I just don't think, the market's trying to price in what the currency translation will be to earnings. But I think right now you're just way too attractive from a valuation standpoint.
Scott Wren, what do you think?
I think airlines are trading stocks. I think they've always been trading stocks and not investments for the long term. So I think there's going to be plenty of opportunities to trade airline stocks. So, I'd be looking at those technicals.
Scott Martin, I can't remember the last time I got on an airplane and there was an empty seat anywhere. I mean, it seems like these guys are at the very least on top of their game because they're filling to capacity. I mean, maybe you could say because there are so many people in the airports all the time, they could be running more flights and making more money. I don't know if the math works on that. I mean, it seems like they're kind of doing a lot right now.
Yeah, and nor do you get a lot on your flight either. So there's profit margins and the stuff that they don't give you anymore. So I agree. I think airlines are running their business well. And don't forget the impact, guys, of commodity prices, especially crude oil. As that falls here, that tends to help airline profits.
Gentlemen, thank you very much.
Good discussion.
Thanks, Melissa.
Well, the UK...